Okay, good afternoon, colleagues. Let me use the word colleagues. I hope you're all doing very good, and I hope our day is going on well. So my name is Semilore. You can call me Lore. I'm standing in for Mr. Nathaniel. So we'll be very quick, like I said much earlier. Can we all hear me?
Yes.
Yep. Okay. So let's just quickly start with the very basic basic ones, like the ones Mr. Nathaniel, what we did for the weekly outlook. Let us see how far the market has gone and what we will be expecting in the coming sessions. So let's start with gold. Let's start with gold. Okay, so we said from the daily we have a structure like this, which you said that so we are expecting this market to grab liquidity at the downside. We're expecting liquidity at this downside. Let me just so this is what we're expecting. We want this, oh my god, sorry. Can you see the annotations? Can you see all this?
Yes.
Oh, fantastic. Okay, let's just do this. So this is what we're expecting. We expect this to grab a liquidity down here before we expect a move to the upside. So at the moment, what are we looking out for? So we know the current direction. We're still expecting a downward move on gold. So let's move. Now that we know the direction, we just go straight to our 4 hours, even as much as our 1 hour instead. That can still do. And one of the things that we did to test this particular trend to expect the downside is that this is giving you an higher high, but we'll now check our stochastic to see what is giving us be our RSI for divergence. So what can we see here? We can see that it's giving us a lower low, lower high. So you can see that. So there's a divergence already in here. We get. So what we now expected was now, so looking at structure, breaking out from the structure, which is this. So we have the market breakout. So what we were expecting in the previous outlook from the weekly outlook was this. So what we were expecting in the outlook was this. We're expecting this to come in here. This. Then we have something like, we want it to come to probably 50% or 61% thereabout. That was where we are looking at. But nevertheless, that is still valid. The outlook, what we are looking at is still very valid. So what we are seeing here now, we can see this is a 1, this is a 2, this is a 3 already. But with this push it down, not necessarily so. We won't be looking at, we won't be expecting it to just go down all the way. So what we'll be looking out for this is what we'll be looking out for. This is going to be like a 1, 2, 3. Then we can still expect another push to the upside. We can still expect another push to the upside, which is going to be like a 1, 2, 3. You know, let me make it more bold. So this is going to be this can be your W if you want to say that. This could be your 1, 2, 3. This is going to be your X. We could have this 1, 2, 3 as our Y, which brings it back to this structure. Okay, so that still gives you your correction. Then we have it down. Then we have it as a Y. Okay. Let me clear all the diagrams. Yeah, so that is one view. That is one view that I'm really looking at. But if you were to look at the stochastic, if you have to look at the stochastic for me, for example, now we can see that the market has really not gone so much, has really not gone so very impulsively. As we can see, let's zoom in very well. We can see that the market has not moved in so impulsively, so we're still likely going to get a push to the upside. So this represents your, you can see it like this. This is your 1. Depending on how you want to see it, this is going to be your impulse. We can see this direction, 1, 2, 3. We have another one here again. Let us see it as this, as an internal structure. 1, 2, 3, 1, 2, 3. We could have this 3, 3, 5 now. Could have this.
Hello, sir.
So you need to put in your mic, please, off. We can have this.
Hello, sir. Please, I have a question, please.
Okay, I'm with you. Please carry on.
So sorry for interrupting, but please, can you kindly close this your trading pair preview and then maybe the stochastic so we can look at the screen very well because it's
okay, it's making it look very small, right?
Yes, please.
Okay. So yes is what we are looking at again. So let me just show you. So this is what we are looking at. This is this. And remember, in a corrective structure, not a zigzag, you can still have something like a 38.2 as your baseline. Let us quickly just check this. 1, 2, 3. So we have not gotten to 38.2, so we might still expect a push to the upside. Okay, well, we still expect a push to the upside. This 78.6, which I'm not thinking the market will get to this point. So we should be looking at somewhere between this place to grab liquidity. So I don't think we need this anymore. And remember, you look at the left, that's the left-hand side. Let us quickly check the demand zones. We can see that there's a structure here. We have this, and we have between here. Come, let me make it a little bit thick. So this is how we draw the demand zone. Okay, so this is going to be the most probable area. This area, this is what we'll be expecting. Okay. So we'll be expecting something like this. Then we should be expecting another one like this. So we said this is our 1 internal structure. Then we go for another one. This is going to be 1, 2, 3. 1, 2, 3. Then we have another one, probably this and this. Then we can now then have another push to the upside to give us this. Probably going to break this high and grab liquidity here. Then before we now have the push to the downside. So let's just see how this is going to play out. All right.
Hi, sir.
Okay, any question?
Can you show us where do you think the gold will go down to, the demand zone?
Okay, yeah, for gold, this is what we're expecting for gold. So a lot of adverts in here. We're expecting gold to come down to this this level to break this liquidity. Yeah.
I mean, let
me show you.
Because before you go down to that highlighted area, right? You said that you will go up to the supply zone.
Yeah.
So before you go up to the supply zone, where do you think it will start to go up?
When we start to go up. So this is what we are. This is what we are looking at from the daily structure. This is what we are looking at. This is a structure, right? but we are not expecting it to just go all the way up. All right, so what we're looking out for is that this structure is still going to give us a push to the downside. Then afterwards, once that grab liquidity at this point, then we will be expecting a push to the upside. Okay, so that is what we are looking at right now. But for now, we are not, that push to the upside is not going to come just like that. All right, so this is what that is our view currently.
I'm sorry. I think I didn't
You didn't
ask
get
correctly.
you didn't get what I said. Okay.
I get what you say. I mean in the 1 hour time frame.
Okay, good. Let's go to the 1 hour time frame right now.
And then we are expecting to go up to the supply zone, right?
Yeah, that's what we're expecting.
And currently it's we are thinking that it's coming down. Yeah. So that is my question. Where do you think it will come down to before it go up to that supply zone in 1788?
Okay, so very good. So we might, so at this moment right now, there are actually going to be more like two options we're going to be looking out for. So this can actually be the final correction and not necessarily come back to this point. So what we can be expecting is something like this: a 1, 2, 3. All right. So once it's over, then we now look for a bigger structure. Do you understand? We look out for the bigger correction.
Okay, understand.
Yeah, so we can look for a bigger structure. Gives us a 3x, then a y down. Do you understand? So that one we'll be looking out for, because this did not give us our anticipated move. What we wanted ideally is to get hit to the 50 to 61%, into the box before we have a push down, but that didn't give us, so obviously did not make us, we were probably not ready for the move. So what we'll be looking out for to be on a safer side and to get a better entry, we can allow this whole stuff to be completed. This is going to be our bigger W. Then have a push to the upside, enter this correction. We can still buy this, but this is going to be the ultimate direction. I don't know if you understand now. Is that clear enough?
Yes, understand.
Yeah,
clear. Thank you.
Thank you very much for the question. That was very good. So having said all that, we'll move on to, I think we're done with gold. Sorry, this is not a paid version, so that's why you're seeing all the whole thing popping up. This could be quite annoying anyways. Okay, so that's that about gold. Then we're going to move on to let me check out. The next pair is going to be Cat Chief. Let us see what Cat Chief is saying. Let me just search for Cat Chief here. Still use this. Okay. Okay. Let me do GPA read out. I'll come back to Cat Chief later. Let me just do GPA UD. This is GPA UD. This is it. Fantastic. So what we said about the last outlook, what we were looking at, let me just cancel all this. Okay, good. So what we said in the outlook was this. So something similar to what we talked about gold, if you can remember what we showed about gold. So this is giving you a structure. All right. So you could see this as it's going to be say 1. So you can, this could be your structure. 1, 2. Okay, no, this is not going to work. 1, 2, 3. The W, your X. Then what we're expecting is this, your Y. That's what we're looking out for before we now have a continuation to the downside. Okay. So right now we have a push. I think there was, I don't know if there was a setup for this. There should have been a setup for this. So let's move on to, so now we're expecting a push to the upside. Let's just go to the 1 hour and see where we must have, where we didn't get the trade. Yeah, you can see now we didn't get, it didn't get to the 50%. Let's quickly check it. As you can see, it's only stopped at 38.2. Oh, am I right? Yeah, we stopped at 50% here, but basically what we expect for a zigzag ideally should be a 78.6. That is our actually at estimated fib level for a zigzag, basically. But now that we didn't get that, we had a push to the upside. So now that we've missed it, what we'll be looking out for is a deeper correction. Okay, we're expecting a deeper correction, which we might be looking at something like this. You know, we can have something as much as this, but we can't do anything now because we have not gotten, the correction is not yet over. So we need the market to slow down a bit, then give us a correction. Once the correction is over, then we can now enter for the push to the upside. So in this state, this is still giving you an impulse. Let us check the RSI to see what's still. So you can see this is very nice, clean. We can see there was a push, then we had the reaction, we had the correction, then now we have a reaction. Okay. So I think this is clear enough. So what do we wait for in GBP/AUD? We know that there's an upside on GBP/AUD. We can see this, we can see this, we can see this. Even as much, it can give you a small correction, push it up to give us a 1, 2, 3, 4, 5 correction. Then we now have a deeper ABC structure or whatever structure we see. Then we now have a continuation to the upside. So that is for GBP/AUD. But right now, while we are still doing this correction, the RSI still remains above 50. This pushes up. Then we have a deeper correction. Like I said earlier, this will likely come down, maybe a bit below 50. Then what do we look out for? We look out for a structure here, look out for an impulse, take a small correction before you now then look out for a smaller time frame, like 5 minutes, to get your entry, basically. But what I'm actually after here is the direction, not entry. Okay, so I don't know if you have any question on GBP/AUD. Is that clear enough? Is it clear? So what is our estimate? What are we looking at for our the limits? So we're expecting that the market should break this point. So we're expecting that the market will break this point. So we still have a good sorry, we need someone to put off the mic, please. Okay. So anyway, so we've seen we have the expected level when it comes to the GBP/AUD. All right. So you expect this, expect a deeper correction before we now expect a push to the upside. Okay, so that's that about that. Then we can move on to another pair. Let's quickly check out what is happening in Aussie USD. Oh, fantastic. Okay, so what are we looking out for here? Let's just do this and get it clear. Based on our outlook, what we said is this. Let's do this. So we have this correction. Okay, 335. We have this as our impulse. Then we are expecting another impulse. Okay, so that's what we're expecting on Australian USD. Let's clear this. So in other words, we can see the market like this in another level. So we're going to be expecting another push to the downside for Australian USD. Okay. Let's move to 1 hour and see what we have. Okay. So what were we looking out for? Let's just check out for the divergence. Okay, so at this point we expected a divergence. Okay. Okay, so this is what we're looking out for, and we expected this to come down to give us a lower high, and this one was giving us higher high, basically. So this is what we were expecting as at last week, as at this thing. This is what we were expecting. We're expecting it to give us a correction up before we push down. But right now, as you can see, GBP AUD USD is not coming, is not giving us the opportunity to buy. So obviously we have to let it go. But what are we looking out for again? So we said the market is going to come down. So what we'll be expecting is that after all this push to the downside, wait for a bigger correction, then we bring into the downside. Now we can see that the big boys are coming in here. How are we sure? See how the market is pulling down. It's pulling out aggressively. You can see this. You can see all this bearish candle. This shows that the big boys are in here. So what we would have to do is that obviously with all this move to the downside, they are creating what we call the supply zones and the demand zones. Do you understand? So what we're looking out for, I really don't know where the market will stop, but we can start taking some assumptions. So this is a level already that we can, this one level here. Let me check it. This is a level here. We can see another level here. Oh my God. So I have less than 10 minutes to quickly run through. Okay. So what are we expecting in Australian USD? So what we'll be seeing here, what we'll be looking at here, this is a push, this is a correction, this is a push to the downside. Then what do we expect? A 1, 2, 3 up. That's what we'll be expecting in here. Right. Can you see that? Okay, we'll be expecting a push to the upside. That's going to be our correction. Once that happens, that is going to be in line with the supply zones. Okay, but always remember that your fib level should be the first thing. But right now, we cannot create any fib level now because the market has not started reacting, going back or correcting. So there's still a major impulse going on right now. So we'll just have to stay off the markets. Okay. So that's that about GBP AUD USD. Remember, the direction is still down. It's still going to go down. So how far are we expecting this market to go? We can actually do a test run. Extension. You take it here 1, your 2, and your 3. So basically, what we'll be expecting will be around this point. This is how far we are going to with Australian USD. Okay, this is how far we are going with Australian USD. So until proven otherwise, but this is what we are looking out for. So wait out. So right now we didn't catch it very early, but we'll just wait for a deeper correction. Then you ride the wave down. Okay, so that's that about Australian USD. Let's quickly move on to another one just very quickly. I'm coming. Australian JPY, I think about this, almost the same thing too. Australian JPY, yeah, almost the same thing. Yeah. Let's go to 1 hour. Yeah, so this is what we were expecting in Australian USD JPY. We were expecting this push to this is a push, broken a structure. We're expecting this to come in here to probably around 78.6, but right now what we are seeing here is that it's coming down. So what we could look out for is this one. This is going to be a 1, 2, 3. We could expect another push to the upside, then before we now then go down. That is about our Australian Aussie JPY. Let's quickly put on the FIB levels. The FIB levels. FIB. Yeah. We can see this is where we are. Now let us check whether the market has ended, that is probably coming down. Let's check this. Okay. We can see this. It's already at 61.8. We have this below 50. But for me, it's not coming in very aggressively. So I would not be expecting that it should just go down all the way. So what we can be expecting is another push to the upside. This could just be another 1, 2, 3 and give us another push to the upside. This could be 1, 2, 3, 1, 2, 3, 1, 2, 3. Before then we now have the push to the downside. So at this point, we should be expecting some divergence at this point. So this is giving you higher high. The other one should be giving you a lower low. So basically, this is what I will be expecting for this particular pair. Yeah, but obviously the downside is inevitable. And as you can see, the stochastic is actually down, showing you that it's already oversold. So we might be expecting another push to the upside. Okay, let's check out. Yeah, we expect another push to the upside. Okay. Okay, so that is that about Australian USD. Let me check out for any form of confirmation. Let's expect some push. Let us just say this one plays out, but I'll be expecting a push to the upside. Let's see. I have less than 10 minutes thereabout. So 1, 2, 3. This is one. So we could just see this as 1, 2, 3. Okay, so let's check the FIB level for this. Okay, so it's still within the 0.5. So I wouldn't be expecting it can get as much as down to 7.6, but I think this will be the best. This will just be the best, the most likely probable areas, somewhere here and somewhere here. Yeah, somewhere there. So we would be expecting a further push to the upside. So let's just see how the market would play out in here. Okay, so I think that's what I have in here for now. I don't know, is there any other pair you want us to quickly look out for? Any other pair anybody looking out for?
We don't Euro GBP.
Pardon?
Euro GBP.
Mr. Yodino, let us see this. So this is what I'm expecting in Euro GBP right now. So this is what I'm expecting in Euro GBP. Let's check the RSI. It's down already. So let me give you the first alternative. This will be my first alternative to Euro GBP. Okay. My first alternative will be this. Let me just take it to the lower time frame. So for me, this is what I'm looking out for. Sorry. This looks to me like a 1, 2, 3, 4, 5, basically extended 5. Then I'll be expecting a bit of a correction to this upside a bit before we now have another push to the downside. So that will be my first assumption. The other one will be this. This will be the alternative. It will be my first alternative. We'll be expecting something like this. This is your impulse. We have this. We could have this before we have a push to the side, but I don't think this is probable. So we can just be looking at this structure like this. This is another alternative. Okay. That'll be my own bias. The fact that the upside, at least to this particular level, you should be expecting a push to the upside before it corrects. Let us see the RSI. The RSI is still below 50. So the push to the upside is not yet, we might not be able to clearly state. It's not clear yet. But if you want to know whether the upside will come in, we must have a very strong impulse. We must have a strong impulse which will take the RSI above 50, wait for a small correction, then you take it up. Okay, so that is that about Euro GBP. I don't know if I'm able to answer your question.
Yes, thank you.
Yeah. So, but this,
Mr. Lori, please, I wanted to go through AUD JPY again, and it's not so clear to me, please, about the reversal, because I'm actually currently in the sell.
Okay, and it's like, if you're in the sell, then that is still fine. I mean,